All right, welcome to today's webinar, The E-Commerce Opportunity and Managing Sales Tax Compliance Nationwide, brought to you by ArcherPoint Retail, Avalara, and Sana Commerce. Both retail and B2B businesses are improving operations, inventing new models, and changing how they engage customers in a digital world. This can affect your business processes and sales tax compliance, so you need to make sure you have a solution to manage your growth and initiatives. Our presenters today are Scott Peterson, Director of Government Affairs with Avalara, and Giuseppe Ianni, Business Development Director with Sana Commerce. Scott, a former COO, brings his wealth of knowledge of tax and legislation with 10 years as Director of the South Dakota Sales Tax Division and 12 years providing research and legal writing for the South Dakota Legislature. Giuseppe brings 10 years of experience in e-commerce for Microsoft Dynamics and is currently focused on educating partners and customers around e-commerce, market, and industry trends. During our hour together today, you'll learn about trends in e-commerce and the tax changes that could have an impact on your e-commerce strategy, including key trends in B2B and B2C e-commerce, and the opportunity to add value to your clients, sales tax changes and how it can affect your industry, and how integrated solutions leverage your ERP investment to scale as your business grows. We will have a Q&A at the end of the presentation, so please, as we go along, type your questions in the questions pane of the GoToWebinar console, and time permitting, we'll get to those questions during our hour together today. Without any further delay, let's go ahead and get started. Giuseppe, over to you.
Thanks, Suzanne, and thanks everybody for joining. So as Suzanne had mentioned here to begin, today we're going to be focusing on a little bit about some of the changes in the marketplace today, in particular for retailers, distributors, and manufacturers, and how we can address those changes as a business to adopt and stay ahead of those trends or to coincide with those trends and ensure that the software, the technology we have as a business is allowing us to grow and scale with some of the changes in the industry. And as she mentioned, my name is Giuseppe Ianni. I wanted to thank everybody. My contact information will be provided following this, so if you have questions, please feel free to reach out to me. And just a quick agenda, we're going to start by focusing on a little bit about today how businesses are engaging clients in the digital world, how the change of the marketplace today is affecting our business, how we can better engage our clients through the use of e-commerce. In particular, we're going to focus on some of the trends in the industry right now that are there, and how this is now going to allow us to transform our business, but also transform how we do business with our clients online. And in particular, we'll focus on the integration aspect of that, whereas we all in the audience here are running an ERP, how we can utilize integration to offer us a shortcut to getting online in terms of how quickly we can go to market and how much ROI we can really bring back to the table when it comes to putting a solution in place and streamlining the back-off maintenance of going online. So with that being said, we talk a little bit about that transformation in the marketplace and today, so how companies are evolving, transitioning from traditionally manual order entry to phone and fax orders now to the digital world of e-commerce. That not only creates a lot of challenges, I think, for a lot of businesses out there in the marketplace today, but it also creates a valuable opportunity for us. There are ways that as businesses we can adapt, put in place aggressive, friendly use web stores that our clients will really adapt to or adopt to and allow us to really capture more market share, capture new revenue, allow us to service more clients without having to add large overhead. And that's something that e-commerce allows us to do, is to really capture a larger market presence, have that catalog online 24/7 so I don't have to be at liberty of a sales rep on the phone. So that's something that Sana has done here, is really try to partner with our clients to enable you to be able to master the digital transformation in the marketplace today that is actually going on. So we're going to open it up really quickly here with a quick poll question to start for everybody in the audience who's online, just to get an understanding of who is actually selling online. So not necessarily do you think you should or shouldn't be, but are you selling online today? Do you have a current web presence online? Is it a catalog web presence? That's fine. Do we actually have a portal where people can actually come and place orders, whether it's retail focused or more login driven, more B2B focused? So we'll just give everybody a few minutes to answer that, and then we'll kind of continue along. But always just good information to share to see who is and who isn't online. If you take a look at industry trends and polls, really only one in four B2B distributors is actually selling online today, which is kind of a crazy fact. But as you look at that, the B2B marketplace is almost 4 times the size of most retail markets. So a large opportunity there in the B2B side. With that being said, I wanted to dig into that opportunity, right, when we talk about e-commerce and why we should be there. Well, as we talk about that, we take a look at expectations here of it reaching about $334 billion in 2015 and are projected to top $480 billion by 2019. So that's what's happening in the consumer space when it comes to selling products and services online. The number continues to climb, and it's climbing rapidly. And why is that? Well, as we look at that, consumers are always connected nowadays, right? Whether it's via their smartphone, their tablet, or their computer, they want that convenience. They don't care necessarily about a personal shopping experience with the sales rep anymore, but instead would rather do it themselves online, whenever, wherever, however they want, which is what the polls and the trends are telling us. And how we accommodate those trends is really up to our business. And one of the big areas that's exploding now is the need and the ability to deliver an experience for smartphones. So we take a look at some of the statistics on the screen here, noting that consumers are shopping on desktops, tablets, and phones, but also the market trend of smartphone usage, jumping 95% in a matter of a year to almost $40 billion. And again, we take a look at it.
Sorry to interrupt. I'm not seeing your screen for some reason. I don't know if maybe one of our other presenters can let us know if they see it, but maybe can you try sharing your screen again?
This is Scott. I see it.
Okay, great. Never mind.
Perfect. Well, thank you. So again, with that being said, that number of smartphone usage jumping from over 40 to almost 75 billion in a matter of 2 short years. So what that obviously tells me is that people, number one, are more comfortable buying from their phone, but also more and more businesses are driving to deliver a mobile phone experience, right? They understand that most users today have the need to go online. Now, I think the challenge that is now posed back to your business is, how do we have a website? How do we deliver that digital experience that can not only accommodate a tablet and a mobile or a desktop and a tablet, but also how do we deliver that same rich experience, a personalized experience, out to mobile phones? So again, this is something, as we take a look at that technology becoming more and more relevant, the number or percentage of users or just people on this planet that have mobile phones really driving through the roof. At this point, you know, more people in this world nowadays have access to a mobile phone than a toothbrush, which is crazy to think about, but that's the trend, and that's why we see this number continuing to climb through the roof. And again, as a business, what are we doing to ensure that we capture a percentage of this revenue or market share? So with that being said, I mean, that number obviously continues to rise in the consumer space because consumers also want flexibility, right? A lot of them, you hear the term or the token omni-channel, right? Being able to ensure that our business collectively can show the same amount of availability on our website, in store, and in our warehouse. They're all in sync. You know, clients can come online, they can buy, they can return in store, they can buy online, pick up in store, return it and mail it in from an online starting point. So all those ways that we can tie that consumer to one unified experience. And again, that really just goes back to the level of customer service that we can deliver back to our customers in the end, and why that's so critical in the marketplace today. I was at a conference a couple weeks ago. The old Men's Warehouse representative, George Zimmer, was there talking about how certain retail giants like Nordstrom have done a really good job of tying that whole customer service experience together. They're not obviously the cheapest retailer to go and buy from, but they're capturing a large percentage of that market share because they've been able to deliver that rich consumer experience. Whereas you take a look at big platforms like Macy's that are really struggling to keep up because they haven't been able to tie their organization, all the software, all the technology together and deliver that nice consumer experience. So you take a look at those businesses and what happens over the next 5 to 7 years, and who continues to capture more of the market share and who continues to fall behind based on the fact that they're not picking up on what consumers are asking for. And what consumers are asking for, and what, again, the statistics show is that customer experience will overtake price, okay, come 2020. And this is, again, already a change that's becoming a part of the reality of today that we live in. People now expect that companies know their individual needs and they want that personalized experience, from booking a hotel to booking a flight, booking a rental car, whatever it might be, buying a product or a service online. We want it to be fast and easy, and not to just be another statistic to a business that we're working with or buying from, but to actually be able to address their needs, whether they be my needs today or my needs in the future, which is where you see a lot of people now talking about big data and BI. It's taking all that rich information that our ERP has and then repurposing that information online in these buying environments. And some of those trends are also obviously coming from a fact that a lot of the consumers today that we deal with at heart may be the B2B buyer online that's working with us, that for years has been used to collecting phone and fax orders, dealing with their own kind of self-service needs, and working with your business. And we see that large transitional shift from, I'm fine with phoning and faxing, to, I really don't want to do that anymore. I want that portal to work with, because I use that portal in my day-to-day life when I'm buying, new socks, or I'm reordering in bulk from Amazon, whatever it might be. It's really transitioning and pushing down into the dealer-distributor market, which again is not only allowing a nice opportunity for us to capture that market share, but also delivering, again, that challenge back to our business from how do we keep up with the demands, the trends. And again, those trends in the business-to-business market, again, are going through the roof as well. As I mentioned this a little bit earlier, only 25% of B2B organizations are currently selling online, which is a stat from the Internet Retailer here. We take a look at the statistics, even over the past 2 years, jumping from about 7 to 780 in terms of billions of dollars of growth online, up to almost 1.1, 1.2 million in 2020, at almost a 10%, 9.5% clip per year in terms of growth. And as we evaluate those trends, the bulk of those businesses, again, 8 out of 10, are currently now reevaluating and investing in e-commerce. How is this going to work for my business? How do I best tailor to capture this market share and deliver that rich customer service experience to my clients in the end? So something we need to prepare for now, to understand the trends, and again, also understand the impact to our business and what that could mean if we're able to capture a piece of this revenue versus just dealing with phone and fax orders that we've been dealing with for years and years. Obviously, not only have the retailers begun that transformation, but also the B2B buyers. A lot of professional buyers out there, again, do their research online. They're looking at your competitors' products, services online, crawling for pricing out there before they're actually buying any products, before they might approach you to actually become a customer. And again, a large percentage, almost 68% here, we note, are already purchasing products online. So I know I deal with a lot of people every day that says, you know what, our clients are happy with phoning and faxing in orders. Well, statistics say otherwise. They're out there actually buying from other users. They're buying in their home life. They're ready for an application to be put in place that will allow them to self-serve, which will allow you to be cleaner, leaner, faster as a business when it comes to delivery once you put an online marketplace in place. So obviously the market opportunity, as we look at the two side-by-side, retail being the red line, more B2B being the blue line here, we take a look at the market opportunity that's out there as a whole, and Forrester predicting that almost a 10% market growth year over year here in the two channels here, of which that B2B market accounting for about 1.3 trillion here by 2020. And then breaking it down a little bit more granular here as we talk about the difference between a retail client and a wholesale client. Obviously retailers are already on board. They're buying from us. We see the marketplace growing, and that transformation is here. People are done phoning and faxing orders. They want a more clear, robust way to actually order from us. The ERP really plays a critical role in all of our business, I think, today, and we need to take that into account. More people are looking for second-generation e-commerce platforms. A lot of people that I talk to every day that run a system like Microsoft Dynamics have traditionally had a website in place. They've grown as a business. They're now at a point in time where they need something that's going to scale with their business, but also keep their business lean. And that's where integration really plays a critical part in our growth and our success, is replacing that intro platform that we've been on, now finding a system that actually communicates and drives data from the ERP out to our customers, which is where we see a lot of people who are traditionally managing a web store database and managing their ERP, which is very cumbersome. It basically results in a lot of duplicate data being done or inconsistencies of information. So as we kind of drill down into different needs for different users here, we take a look at those different needs based on the user. Personal contacts in the manufacturing industry is heavily valued or highly valued. When you take a look at an e-commerce solution that leverages your ERP, it's possible to provide a really personalized buying environment with unique product information, unique prices, promotions that are relevant to the user who's actually logged in, unique upsell, cross-sell suggestions, even predictive ordering. Predictive ordering has become one of the biggest demands in the industry right now. Being able to log on, know what I traditionally buy from you, know what I've bought from you over the past 4 to 5 years, and actually build out that shopping cart for me without me having to build it by hand. So a nice, rich starting point. All this type of stuff is where the journey really begins but doesn't end. It's just the initial starting point to ensure that we're able to, again, ramp up the level of customer service that we can deliver to our customers without them having to pick up the phone. So we break down, at a really high level, clients that are using Microsoft Dynamics. It's a pretty intuitive, it's a pretty complex cycle with the make, move to sell, starting with the supplier, going to the manufacturer, getting into the distributor, the retailer, the wholesaler, and then inevitably to our consumer. Each business obviously has different needs and vision for how long or how much of this process they might want to actually tackle. But in the end, again, the ERP is touching all these different data points. And as we take a look at what Sana's done, it's ensuring that we can take advantage of everything that's being managed by the business today and replicating that information out to the buying environment. And as we look at clients who have been with us for a long time, the ones who have gotten on board early prior to this, digital transformation even coming into play, a lot of these guys are doing a large percentage of their business online and continue to see success in the industry with additions of smartphone websites and B2B facing websites outside of just the traditional B2C platform. So I guess I can open up for additional poll here at this point. Anybody in the audience currently evaluating selling online within the next 12 months? Something good to kind of understand is this in our roadmap? Are we actually looking to do this today or in the near future? So just some kind of food for and we can leave this open just for a minute here and then again kind of pull these back in the end, but we appreciate your guys' feedback too here. And as we talk about who's selling online, who's doing what online today, we take a look at, how do we get there? How do we allow ourselves as businesses to grow and what actually comes next? Well, I think what comes next is, how do we put in a platform that's going to allow us to accommodate this growth and keep up with the needs of retailers, distributors, and manufacturers? And I think the answer is Sana. We offer a flexible solution for any business, whether you're selling retail, you're selling wholesale, you need a solution for your salespeople or customer service to do order entry, we have that. It's completely integrated to your ERP, and in this case, Microsoft Dynamics. So we repurpose all that great rich data inside of the Dynamics ERP out to the website. Not just writing orders back over, but having over 42 integration points that we touch to support even the most complex business logic that you might have inside of your ERP that could also be even custom built. Providing all that on top of hosting and design to ensure that the website's going to run smoothly and also look slick in the end. And as you look at that, we are certified for Dynamics. We do use the core business logic. We're not your traditional shopping cart that is interfaced and built integration and back to your ERP and requires you to maintain 2 databases, as I mentioned earlier. This is what a lot of first generation's website look like. We take a look at what Sana's now delivering, which is taking that core business logic that you already set up, that you're already managing today, and pulling that right out to the website dynamically. Again, which leaves you with a single system to maintain in a simple, clean integration. Again, touching a slew of different integration points back in your ERP versus just the traditional order, or invoice. And as you take a look at new releases that are being made, we're going deeper and deeper into the critical touch points inside of a person's ERP today, ensuring that we can, again, keep up to snuff and keep ahead of the competition here in terms of what's available and what's ready. And last but not least, as I kind of mentioned, not only is it important to accommodate the retail and wholesale market, but we also deliver out an environment for salespeople or customer service that allow us to, again, capture and put our internal users in a similar system that, again, has the same information. What happens to a lot of ERP implementations traditionally is you put all these people inside of one application. You want to get streamlined. You want to be efficient. But sometimes from a cost standpoint, we can't put everybody in the ERP. So we recognize that. We built a web-facing portal that would allow you to put all your users in a web-facing application to service your customers. You know, look at a quote, look at an order, look at the availability, look at their price, and make those changes all from a web portal versus having to get right into our ERP. But in this case, it already has the information that the ERP would contain inside of it. And again, full integration back to our ERP, quotes, orders, returns, all that great robust information is sitting out here. We've actually taken it and broken apart it as well, so it actually can be run offline. So we recognize some businesses need to run offline. We have an app in place for that can queue up orders, queue up message history. We can take it offline, go on site, and capture orders, and then sync it back up at the end of the day when we've come back into the shop. So some things that we've tried to do at Sana here to ensure that we can keep in line with the digital transformation that is occurring in the industry today, deliver software that allows us to run leaner as a business, to be more streamlined, more efficient, and ensure that we're able to keep up with the digital change in the marketplace today, allow our customers, those retailers, the wholesalers, to take advantage of what actually is in the marketplace today. So with that, I'm going to hand it off and transition it. So Suzanne, thank you. Everybody, thank you. Scott, I think you're up.
Yeah, and we're going to turn it over to Scott Peterson now. You should be a presenter. Share your screen.
Okay. Thank you very much, everyone, for joining us. And I hope you all took Giuseppe's comments to heart. If you're not doing business online, your competitors are, and your customers are wondering why you're not. So if you take his advice and you're doing this, one of the things you're going to encounter very quickly is that sales tax is more complicated than it was when you were just doing business from your store, or maybe your couple stores. And today I'm going to talk a little bit about, that's me. I'm going to talk a little bit about what's going on out there right now in sales tax across the country. Talk a little bit about the common sales tax challenges for manufacturers, wholesalers, and then retailers / wholesalers, because wholesalers are kind of in that middle ground, and the whole concept of retailing is becoming quite fuzzy as manufacturers also retail and wholesalers also retail, and so a lot of the things that are applicable to retailers are also applicable to both manufacturers and wholesalers. And then we'll talk about AvaTax. But first, let's start with a little poll. Do you outsource payroll? Have you ever been audited?
We'll give everybody just a minute to respond to the first question of, do you outsource payroll? And thank you for your responses. Close that. And then the next line, our next question is being launched now. Have you ever been audited? Looks like a majority, well, 60% of you have, so sorry for that, but I think we all go through it at some point, right?
Okay, well, yes, I'm sorry to hear that too. That's, but I'm not surprised. States are consistent in the way that they audit, and what has changed in the way that they audit is that they're hiring auditors, and I'll talk about that, and they're becoming more sophisticated in who they choose. But the percentage of businesses they try to touch every year is not going down anywhere, and it's often going up everywhere. So as you already know, the reason why states audit you and the reason why states are asking you to do things that you don't normally want to do is because sales tax is a big deal within states. Sales tax is revenue, and many of them, oddly enough, are still recovering from the recession. Many of them have gone into a brand new recession. Those states that are heavily dependent upon natural resources and taxes from natural resources, Wyoming, North Dakota, Oklahoma, Alaska, Louisiana, those states are having some very serious budget issues. So even though the rest of the country is doing relatively well, and frankly, the rest of their economy is doing relatively well, their oil and gas and coal business is so prominent, and their tax structure relies on it much more so than the Pennsylvanias or the Ohios that also have it. Those states are really suffering these days. And sales tax, like all of the taxes, is a source of risk because you are the revenue collector. I spent 10 years as the director of sales tax for the state of South Dakota. My title wasn't revenue collector. My title wasn't tax collector. It was director. And it was director because my job was to help. My job was to facilitate that the taxes, that the retailers understood the rules and had the tools that they needed to be the tax collectors, because it's business that is the tax collectors. Every tax we have in this country that I can think of imposes some sort of burden on a business. So, as I said, general sales and use taxes are 1/3 of all total state tax collections. And you have to forgive me, I have a cold, so every once in a while I have to cough. States are hiring auditors, better equipment, better tools. They're doing data matches, so they're looking at what a normal retailer in a particular segment is doing in some other state or nationally, and then they're trying to figure out why your business isn't like that one. And that's how they create these, on an audit list. States are passing laws to redefine nexus. Nexus is that the phrase that means you have a sufficient physical connection with the state so that the state has the legal authority to make you do things. So they come up with these ideas called affiliate nexus and click-through nexus, and there's some new things out there that just happened this year that are even a little bit wilder than that. And they're, in addition, trying to broaden their sales tax to cover new or broader definitions of what's already been taxable. So one of the things that's going on, and has been going on for a long time, is that states are trying to get Congress to give them authority. In 1967 and then again in 1992, the United States Supreme Court ruled against the states when the states sought to require an out-of-state retailer to collect the sales tax. And in the first case, the Supreme Court just said it's unconstitutional. It's it's a violation of due process clause. No, a violation of due process clause and a violation of the Interstate Commerce Clause. 1992, the court reverses itself on the due process clause, at least for that taxpayer, Quill, and then at the end of their case said we're going to affirm our 1967 decision on interstate commerce, but this is Congress's area to regulate. Then they said we encourage Congress and the states in business to talk, and if there's a resolution, it should be done by Congress. So since then, the states have been trying to get Congress, and Congress doesn't want to do this. All Congress gets out of this is blame. They don't get any credit, and they don't get to spend any of the money. So and there's 3 bills that are being discussed. 2 of them are alike. Marketplace Fairness Act, that is the historical version of this, gives state, and what they all do is they all do one thing in common. They give states more authority over retailers than those states have today because of Congress's ability to regulate the interstate commerce. Marketplace Fairness and the Remote Transactions Parity Act give states authority over out-of-state retailers. So if either of these 2 were to pass, Virginia, for example, would have authority over North Dakota retailers, and North Dakota would have authority over Hawaii retailers. And so the states would pretty much enforce the current system that they have in place for sales tax. They just enforce it on a broader group of people. Not particularly well liked by a lot of internet-only retailers, and a lot of the business community in general. A lot of the business community does like it though, and all those businesses that have to collect sales tax everywhere, the big box stores, the telecommunications companies, you know, in their view of the world, those who aren't collecting sales tax have a competitive advantage over them, and they want everyone to have the same advantage, and where tax isn't the thing that the retailer competes on. Is it likely that Congress will do something? I'm not sure. Congress historically has never been generous to states. More often, Congress has been likely to penalize states. So there are some examples. Let's see. The first example would be back in the 1950s. States won a big Supreme Court case on corporate income taxes. Congress immediately passed a law limiting states' corporate income taxes. Congress passed the Internet Tax Freedom Act, which prohibits states from taxing Internet access. Congress passed a thing called the 4R Act, which is about railroads and requires states to treat railroads like they treat all other common carriers. So it's likely that if something does pass Congress, it's going to be in response to something else that's happened, like the Supreme Court acting, and that it will restrict what states are allowed to do, although it's going to be a horrible fight because the states will fight that tooth and nail. Let's talk a little bit about sales taxes by industry. Some of the things that affect the different segments of industry, and I told you a little while ago that wholesalers kind of, and frankly manufacturers to a certain degree, are all blurring the lines on who is and who isn't a retailer. But for a manufacturing in general, if you're a manufacturer, you're generally historically not collecting sales tax. You're somebody that pays sales tax. The things that you buy to operate your business are often taxable, although many states have exemptions for what they call a manufacturing exemption, but it's an exemption that applies only to the things that you make and the equipment that you use to make it. So the raw products that you go into making a chair, the wood and the leather and the nails, all those things become part of the chair, and you can buy them all for resale, and the manufacturer doesn't pay sales tax on them. In some states, though, all the tools and equipment that manufacturer would use to build that chair are taxable. Some states would exempt it, and it's a real mess out there, and it's really complicated because hardly any state does the same thing in the same way if they do provide some relief for manufacturers. So a warehouse, inventory, property, if you have those in multiple locations in multiple states, you have physical presence wherever you have one of those things. And when you have physical presence, that state has the right to come in and chat with you. Now, often that chat's in the form of an audit, and they'll ask you questions you don't really want to answer. Audits are quite personal. Remote employees or field sales reps can create nexus. I just got off a plane today coming back from New Orleans, looking at the folks sitting in first class thinking, okay, all you people are business people, you're probably all salespeople. All you people just flew out of New Orleans. If the companies you work for sent you to New Orleans to make sales, that creates physical presence in Louisiana, and you have to collect sales tax. Your companies have to collect sales tax in Louisiana. Not the kind of conversation you want to have with a salesperson on a plane. They don't want to hear that kind of conversation. But that's the law. If you're out there, if your staff's out there out there making sales somewhere, wherever they go, physical presence for you and an obligation then for that you to comply with whatever state's laws they're in. Tracking and documenting exempt sales to sellers and resellers. There are almost more rules around not collecting sales tax than there are around collecting sales tax. And at least with the sales tax, that tax you pass on to your customer. There's some cost associated with you that you have to bear. But when it comes to exempt sales, your customer is exempt. All the costs that you incur to document and track your exemptions, your exempt customers, are all just a cost to you. And if you can't prove that you have that data, prove that that was a legitimate exempt sale when that auditor comes in, then you pay the tax. There isn't any Any argument? No discussion. If you are a manufacturer in the direct-to-sale business, direct consumer business, you're a retailer. And so everywhere where you have a warehouse, everywhere where you have salespeople, all of those people not only keep physical presence for your warehousing business, your manufacturing business, but also for your retail business. So even though you've got a nice little website out there and you're selling right directly from that, every state in the country is going to think, oh, you got a warehouse in my state and you're making retail sales in my state too, why aren't you collecting my sales tax? And then I said you have to understand this thing called a use tax, which is the companion tax to a sales tax. The use tax is the tax that you and I as consumers pay when we purchase something from someone, used it in a state that has a sales tax, and we purchase it from someone who doesn't charge us sales tax. So, top 5 key issues for manufacturers. Understanding product taxability. If you're a retailer and a manufacturer, you have to know whether or not the states where you're making sales tax what you sell. Managing direct pay permits. Direct pay permits are actually a really nice thing. They're an attempt by states to make use tax administration simpler for the manufacturer. You apply to the state, they give you a direct pay permit. The direct pay permit you give to your suppliers then don't have to charge you sales tax. You, on the other hand, have to manage all the use tax that goes along with the stuff that you're buying tax-free but using for a taxable purpose. You have to account for drop shipping rules. You have lots of customers who are retailers and are wholesalers, and they sell something to somebody and then you just drop ship it to their customer. Well, there are a couple states, New York, California, Florida, where your physical presence is used against the retailer. So you have a retail customer who makes a sale into California, and that retailer doesn't have physical presence, so the retailer doesn't collect sales tax. You have physical presence in California, you have to charge that retailer sales tax. Your physical presence is what governs when the state can't make the retailer collect the sales tax. Installation and repairs. If you sell a product that you install, that installation creates physical presence. So when you're a California manufacturer and you sell something to somebody in Minnesota and your staff goes over there and they install it, you have physical presence in Minnesota. And all that which goes along with being in Minnesota applies to everything that you do. And then manufacturers are out there, like I said, getting into the retail business and all the things that go along with being a retailer. Wholesalers have all the same issues as manufacturers. They buy things from manufacturers exempt because they're going to resell them. They sell them exempt to retailers because the retailer is going to sell them to the consumer. That's the transaction. But wholesalers are also operating retail businesses. Wholesalers are also they have websites. Wholesalers are likely going to be drop shippers as well. And if a wholesaler has physical presence in California and the retailer doesn't have physical presence in California, California is going to make the wholesaler collect the tax. And it can be a surprise. And if they come in and audit you as a wholesaler and they find that you're making sales to folks in California when the retailer didn't collect the sales tax and they can't make the retailer collect sales tax, they're going to get the tax from you. So find out which states have these drop ship rules, keep a list of them, tell your salespeople. Let's chat with our retail partners when we're making sales in these states so we know who is charging sales tax. Retailers. Operational issues. So what does a seller do on a normal day? They're out there making sales. All the things that can go to in a website. You got a website and it doesn't work. You got a website where the tax engine doesn't work. You got a website where the postal address thing doesn't work. Everything slows you down. Every time something slows down, I know I am. If I can't make a purchase really quickly, I'm mad. I move on. I reboot. I do whatever it takes. I'll probably spend more time trying to get back to that website than I would have spent had I just waited for the system to work. relying on basic and manual methods to handle sales tax. Don't know how or why someone would operate an online business with manual operations. I mean, you outsource everything. You outsource your credit card, you outsource your payroll, you outsource the delivery, the fulfillment. You know, why in the world would you continue to do your sales tax? Adding newer additional products. So every time you add a newer additional products, you have to wonder what the taxability is. So if you're a t-shirt retailer and you're really good at that, you know where t-shirts are taxable and you know what to charge, and then all of a sudden you decide you're going to start selling necklaces that go with t-shirts. Okay. Are you going to just assume that necklaces have the same tax treatment as t-shirts? If you do, you'll be wrong, because there are states that don't tax t-shirts, but those states that don't tax t-shirts, New Jersey and Minnesota, tax necklaces. So if you add necklaces to your repertoire and you haven't been collecting sales tax in Minnesota, New Jersey, because you know they don't charge sales tax on t-shirts, you're going to be in trouble if you don't start collecting sales tax on those necklaces. Selling to resellers and exempt entities, managing and tracking exemption certificates. I said for the manufacturers and the wholesalers, the tremendous burden that managing exempt sales exists. For a manufacturer and a wholesaler, maybe 100% of their sales are exempt. So maybe their process is a little bit more straightforward because they're always going to sell exempt. It's always going to be for resale. And they've got, you know, they can set up their customers and they can manage it from a customer perspective. Retailers don't know. If you're operating a website out there, you have no idea if the next person that logs onto your website is a school district in Cheyenne, Wyoming, or, you know, a consumer in downtown Trenton, New Jersey. The two of them might be ordering exactly the same thing from you. The two of them have entirely different tax treatment. A consumer in Trenton, New Jersey is going to be taxable. The school district in Cheyenne, Wyoming is going to be exempt. And the school district in Cheyenne, Wyoming knows they're exempt. They're not going to pay the sales tax that you want to charge them. And they expect you to have some way of facilitating an exempt sale. And then, of course, Wyoming is going to want to make sure that you can prove to them when they come in and audit you that you did sell to the Cheyenne School District. Use tax on store fixtures and items withdrawn for inventory or retailer's own use. It is a relatively simple thing for an auditor to walk in, look at your store, and say, okay, how do you clean the floors on the store? And your clerk will say, well, I just go over to aisle 7 and I get some cleaner off there and we just clean our stores. And that auditor is just going to make a little note in their little book and say, okay, uses their own untaxed inventory for their own personal uses. So auditor goes out and then compares what you sold with what you bought, and presumes that everything that isn't sold, everything that you bought tax exempt that you didn't sell, you used, and they make you pay use tax on that. If you don't keep track of that thing, that will get you in trouble in an audit. So next is creating activities. Selling online or in multiple states. There are states that believe selling online is nexus creating. It is far from being proven in the court system, and yet there's at least 19 states that have a law that says that if you advertise on somebody else's website and you pay that person a commission when somebody goes through their website to buy something from you, that person's an agent of yours, and that agent creates physical presence for you. 19 states have that in the law right now. Obviously, selling in multiple states gives the states the ability to, they share data. So you make a sale in Georgia and you make a sale in Kentucky. Georgia and Kentucky talk to each other about who's making sales in their state. Employing remote staff for field sales and personnel. If you have staff who travel and make sales, who travel and do installations, the marketing department needs to tell the tax department where they are going. You need to know, you won't be able to control them, mind you, the marketing rules, but the tax department needs to know where the company has or is creating physical presence so the tax department can make sure that you're doing this legally. Trade shows are a real odd thing. Every state in the country wants and encourages trade shows in their state, and yet every state in the country treats participation of this as at a trade show as physical presence for sales tax purposes. A couple states, the most recent was Washington, have said if you can come into their state for one trade show a year, and that doesn't create physical presence. There's a couple other states that have these 1, 2, or 3 threshold things, but there's many states where if you show up in the state, you have physical presence. Maintaining warehouses, inventory, property in multiple locations in states. If you're doing fulfillment, if you've outsourced your inventory to someone in the fulfillment business and they have warehouses all over the country and they move your inventory around to their different warehouses so that it's inexpensive for them to ship, you probably have physical presence everywhere. And you need to, so if you are doing using a fulfillment service, you need to ask them where your property is, because wherever your property is, you are, and you have physical presence. And then you have to figure out, the drop shipper and the third-party distributors thing. All those people can create Nexus for you, or they have Nexus and they're going to be charging you sales tax because you are collecting the sales tax. So, complex taxability issues, crazy, just crazy, crazy, crazy. And I'm going to quickly run through the rest of this. States don't care what their neighbors are doing. They do what they want to do. They define things one way. They define things the way they want to define them. They tax what they want to tax. They don't care what their neighbors are doing. They're constantly updating rate tables. There's right at 12,000 sales taxing jurisdictions in the United States. When you factor in the number of rates and product taxability things that happen in a year, something like 14,000 changes in a year. Promotional items, just odd things. You give away things. You go to a trade show or you go to see a customer and you give them something, just an inducement to, to like you. That's taxable. And it's taxable to you. It's not taxable to them. It's taxable to you. You got to keep track of that. Where did you give things away? Did you pay sales tax when you bought them? Selling wholesale, distribution, or resale customer for not-for-profits, all those people create an obligation to get a piece of paper from that customer and to keep that piece of paper in file and hope it's right when that auditor shows up. And then there's sales tax holidays. Relatively common in the Southeast, and they give consumers the ability to buy something exempt from sales tax on, like the 3rd weekend in August. All those things are your obligation to manage. You don't get anything for it. If you make a mistake, you're in trouble. So, 5 key issues: marketplace selling, federal, state, local tax rules, order management and fulfillment. You have to be able to keep all these things up. Managing drop shipping rules, understanding and tracking state nexus rules for e-commerce sales, all sales, catalog sales, salesperson sales, 1-800 sales, and then tracking sales tax holidays. So the way to do this, of course, is to not do this with a piece of paper and a pencil and a spreadsheet and a computer. You need to do this in a way that allows you to sell and manage your inventory and manage your staff and not worry about whether or not your taxes are being collected. So Avatax integrates with 505 different software packages, including Microsoft Dynamics, and it gives you the ability to outsource your sales tax in a way that somebody else is responsible for determining what the taxability is. Someone else is responsible for determining what the tax rates are. It's all based upon the delivery of the product that's being sold. Manages the exemption certificate. So if you have an exempt customer, the system captures the information from that customer, stores it, validates it, and makes it available when the auditor shows up. It's just an amazingly straightforward process. Tax returns. While there's 12,000 sales tax jurisdictions in the country, you don't file 12,000 tax returns. South Dakota has 280 cities with a sales tax. State has a sales tax, 280 cities with a sales tax, and I think there are 7 Indian tribes now in South Dakota with a sales tax. Well, you don't file 288 sales tax returns in South Dakota. You file one. You file one a month, and it has data for the 280 cities, the 7 tribes, and the state. And that's relatively common. It's not universal. Tennessee, where I live, you file a sales tax return for the state, and then you file a sales tax return for every jurisdiction where you have a store, or every jurisdiction that you're making sales into. So it can be painfully complicated. So with Avalara returns gets outsourced. Avalara files a return, makes a remittance for you, saves the return, save the data. It's always there when an auditor shows it. Actually, it's saved in a way and stored in a way and displayed in a way that makes auditing very quick and efficient. And I hate to say this, but the states that audit our customers are in and out in no time at all, because they can see the data, they can see if there's a mistake. It's a really unusual thing, and it's easy to see everything, and they're in and out. It's made things much simpler from an audit perspective. So sales tax automation helps you save time. You're not figuring out why Paducah, Kentucky taxes shoes one way and Lawrenceburg, Tennessee taxes shoes another way. Increases accuracy. There's very little human interaction. That your product codes that you sell, or the codes that you put on your products get matched to the product codes in the Avalara and Avatax, and it's just a really straight, direct connection. Mitigate your risk. You have your exemption certificates all the time. They're always there. They're always available for the auditors. There's a retail sales chain that every auditor can look at. You gain efficiency because you have folks doing this stuff today that you can put on more relevant and income-producing activities, and you increase your profitability. So it's like out payroll. I ran the streamlined sales tax for 7 years, and when I started, I was the only employee. I didn't do my own payroll. I outsourced it instantly. Outsourcing payroll is the norm, and there's no value gained by not outsourcing your sales tax, just like there's no value gained in not outsourcing your payroll. So next step, compliance risks. Do you understand your current processes? Do you document your sales tax policies? Do you do a regular nexus analysis? Do you know where your salespeople are today? Do you talk to your CPA and your attorney about this? And have you automated your sales tax compliance? Thank you very much.
All right, thanks so much, Scott. And we have one last poll, if you guys don't mind. We're going to launch here quick. Just based on what you've heard, do you feel you have a compliance risk? If you don't mind responding to that, and we'll share our results here as the responses come in. I do want to thank everybody for their time. And again, if you have any questions, you can throw them in the questions pane of your GoToWebinar console. Did have one earlier, and yes, this session is being recorded and will be distributed out to all registrants. Go back to our poll here and close that and share out those results. So some are pretty confident they don't. Maybe they've already got Avalara tools in place, but I do want to thank our presenters today. I also want to thank you, our audience, for spending some time with us today. We hope that you consider it time well spent. And to help us continue to offer value, we'd like to ask that you take a few minutes more to give us your feedback, and would also appreciate hearing what other topics you would like covered in future Lunch and Learn webinars. So if you would just simply email your comments to info@archerpoint.com. Again, that's info@archerpoint.com. And with that, we're going to go ahead and wrap up the webinar today. I hope you all have a wonderful afternoon. Thanks for your time.